You know that feeling when you're trying to really understand something complex,
Yeah.
but you're just drowning in data.
Yeah, like loads of numbers, reports.
Exactly. And you can't quite see the forest for the trees. Well, that's what we do here on the deep dive.
We take all those source materials, the reports, the filings, the stuff that can feel a bit much.
And we sift through it all. Pull out the key bits, the insights, really just for you to make it clearer.
And today, we're digging into Coforge Ltd. They're a global IT services company.
Right. A listener actually sent over a whole bunch of their recent documents.
Yeah, we've got the board meeting results, their financials consolidated and standalone, the auditor's report, and their latest investor presentation.
So our mission today, go through these, figure out the main financial highlights, the big strategic decisions they're making.
And sort of what's their outlook? What are they telling investors about the future?
Exactly. Cut through the jargon, get to the core takeaways. Okay, let's jump in. First up, the board meeting from May 5th, 2025.
Right, so the board meeting, it was pretty packed.
Yeah. What was top of the list?
Well, first off, they approved the financials, for the quarter and the full fiscal year ending March 31st, 2025.
The audited ones. Standalone and consolidated?
Yep, both got the official sign-off. And importantly, the auditors, SR Batleboy and Associates LLP, they gave an unmodified opinion.
Okay. So that's basically a clean bill of health, financially speaking.
Pretty much, yeah. It means the statements are presented fairly. It's what you want to see.
A good start. And I saw something about a dividend, sharing the wealth a bit.
They did. Declared a fourth interim dividend. It's Rs19 per share. That's on shares with a face value of Rs10.
Okay, and when do investors need to hold the shares by?
The record date is May 12th, 2025.
Yeah.
And they said payment would be within 30 days after that.
So some cash back for shareholders. Nice.
Definitely.
Now, there was also something else, a share split.
Mm.
That sounds significant.
Yes, that's quite a big move. Potentially affects more people. They set a record date Wednesday, June 4th, 2025 for a share subdivision, a split.
Okay, break that down. What does it mean practically?
It means each existing share, the one with the Rs10 face value, becomes 2 shares. Each of those new shares will have a face value of Rs5.
So if I had 100 shares, I'd suddenly have 200.
Exactly. Your total ownership value doesn't change right away, but the price per share roughly halves.
Right, which can make it seem more affordable, maybe attract more investors.
That's often the idea, yeah. Increases liquidity, makes it more accessible.
Okay, got it. What else came up in that meeting?
They also looked at a fund utilization certificate. This was from Crystal Ratings.
Okay, related to funds they raised before.
Precisely. Coforge had raised money through something called a Qualified Institutional Placement, a QIP. This certificate basically verifies how they've used that money.
Ah, so transparency for the institutions that invested.
Exactly. Shows the funds went where they were supposed to go.
Makes sense.
Uh-huh.
And wasn't there a change in auditors or something similar?
Not the financial auditors, but the secretarial auditors. The board approved appointing Mrs. Prickett and Associates for that role.
Secretarial auditors.
Yeah.
What's their job exactly?
They basically check if the company is following all the corporate laws and regulations. It's about compliance and good governance.
Okay. And this new firm, Prickett and Associates.
Yeah, the documents gave a bit of background, founded way back in '87, based in Mumbai. They seem well-established, covering corporate law, SEBI rules, audits.
Reputable.
Looks like it. They're peer-reviewed by the Institute of Company Secretaries of India, have a decent-sized team, and apparently work with some big names: Siemens, Tata Companies, HUL, GlaxoSmithKline.
Okay, so experienced hands. And this appointment needs shareholder approval too.
Yes, that's right. It needs the nod at the next annual general meeting, but the board has approved it for 5 years, from FY25-26 onwards.
Right. And the meeting itself, how long did it run?
Pretty efficient, actually. Started at 2:30 p.m. IST, finished by 3:41 p.m., so just over an hour.
Okay, board meeting covered. Now, the numbers themselves. Let's look at the consolidated financial results, the whole group picture. Quarter and year ending March 31st, 2025. What's the headline?
Growth. Definitely strong growth. For Q4, revenue from their continuing operations hit INR 34,099 million.
And compared to last year.
That's up a whopping 47.1% in Indian rupees and 43.6% in US dollars year over year.
Wow, that's significant. And the full year.
Same story, really. Full year revenue from continuing ops was INR 120,507 million. That's up 33.8% in INR, 31.5% in USD compared to the previous year.
Okay, so really strong top-line growth. They did mention continuing operations. We'll come back to what's not continuing later.
Right. And if you include the discontinued part, the total reported revenue for Q4 was slightly higher, INR 34,691 million, and for the full year, INR 122,504 million.
Big numbers. But is it profitable growth? How are the margins looking?
Good question. Their adjusted EBITDA margin for Q4 was 18.7%.
Earnings before interest, taxes, depreciation, amortization, the operating profit measure.
Exactly. And that 18.7% was actually an improvement from the previous quarter, up 101 basis points.
So getting more profitable as the year closed.
Seems that way for the quarter. Profit after tax for Q4, just from continuing business, was INR 3,059 million.
And the full year margin?
For the full FY25, the adjusted EBITDA margin was 18.0%. The profit after tax from continuing businesses for the whole year came in at INR 9,635 million.
Which is up compared to last year.
Yep, up 13.5% year over year. So, yes, profitable growth seems to be the story.
That's solid. What about future business? Do they talk about new deals, orders?
Oh, yeah. Big news there. They reported their highest ever order intake in a single quarter.
Highest ever. How much?
$2.1 billion in Q4 FY25 alone. That included signing 5 large deals.
$2.1 billion in 3 months. That's huge.
It really is. And their order book, the business they expect to execute over the next 12 months, that stands at $1.5 billion.
And that's growing too.
Significantly, up 47.7% compared to the same time last year. So the pipeline looks very healthy.
A $1.5 billion backlog for the next year. That gives some visibility, doesn't it?
Absolutely. It suggests the growth momentum could continue.
Okay, any other key numbers we should pull out from the consolidated results?
A couple, yeah. Attrition, the rate employees leave. Their IT attrition, looking at the last 12 months, was 10.9%.
How does that compare? Is 10.9% good in the IT world?
That's actually very good. Often considered best in class, especially given how competitive hiring and retention is in IT, suggests people are, relatively happy working there.
That's a good sign for stability, service quality.
Definitely. And headcount reflects the growth, too. They ended the year with 33,497 employees globally.
How many did they add?
Net addition of 403 people just in Q4 and 8,771 over the full year. Big increase.
Wow. So winning business, growing profits, hiring people, and keeping them. Sounds like a strong performance.
The numbers certainly paint that picture.
What about where the money's coming from, geographically?
Americas is still the biggest chunk of their revenue from continuing ops. Then it's EMA, Europe, Middle East, Africa. After that, Asia Pacific, and then India.
And they break down profits by region, too.
They show adjusted EBITDA by geography, yes. But they do note that assets and liabilities aren't split out that way in the report.
Okay. Now back to those discontinued operations you mentioned. What was that about?
Right. So Coforge UK Ltd sold off a subsidiary called Coforge Advantage Go Limited.
Okay, sold it off. So its results are now separated out.
Exactly. They classify it as discontinued so investors can clearly see the performance of the core ongoing business.
And how did that discontinued part perform?
Well, for FY25, it brought in INR 1,997 million in revenue, but it posted a loss before tax of INR 424 million and a loss after tax of INR 274 million.
So selling it off might actually help overall profitability going forward.
That would be the strategic thinking, yes. Streamlining the portfolio, focusing on the profitable core.
Makes sense. Okay, so that's the consolidated picture. What about the standalone results? Just Coforge Ltd itself without the subsidiaries.
Right. The standalone numbers give insight into the parent company's direct performance.
How do they look?
Still solid. Standalone revenue from operations in Q4 FY25 was INR 15,890 million. For the full year, INR 55,570 million.
And profit?
Profit for the period from standalone ops was INR 1,109 million in Q4 and INR 5,275 million for the full FY25.
So obviously lower the consolidated because it excludes the subs.
Exactly. But it shows the core entity is also performing well financially. It also highlights how much the subsidiaries are contributing to that bigger group picture we saw earlier.
Okay, so financially, things look pretty robust, both group-wide and at the parent level. Let's shift gears slightly. The investor presentation. What's the story they're telling about strategy in the future?
They're really pushing a theme of Robust, profitable, predictable, sustainable growth. That's the tagline they use.
Catchy. How are they backing that up?
Well, they highlight the strong year-over-year revenue growth we just talked about, Q4 and full year, and they specifically mention growth in constant currency.
Right, taking out the effects of exchange rate swings to show the underlying business trend.
Precisely. They're also pointing to those healthy adjusted EBITDA margins as evidence of the profitable part of their strategy.
And the predictable and sustainable parts probably link back to that huge order book.
Absolutely. They emphasize the $2.1 billion intake in Q4 and the strong $1.5 billion executable order book. Plus, they highlighted a very high level of repeat business, 94% in FY25.
94% repeat business. That's sticky. Suggests clients are happy.
It does show strong relationships. They also mention adding more new clients and growing their larger accounts, which they say helps de-risk the business.
Yeah.
Spreads the reliance.
Yeah, less dependent on any single client. And the low attrition fits the sustainable theme too, I guess.
Definitely. They framed it as best in industry, linking it to their company culture. Keeping talent is key for sustainability in their line of work.
Makes sense. Did they talk about diversification in other ways? Like types of work or industries?
Yes, they showcased a pretty well-diversified portfolio
Yeah.
across verticals like banking and financial services, BFS, insurance, travel and hospitality, TTH, government. Also across different service lines like engineering, AI, data, cloud, and geography, of course.
So not overly reliant on one sector or service.
That's the message. They also pointed out a trend of increasing revenue coming from offshoring, which can often be more cost-effective.
Okay. Now, strategy-wise, was there anything else significant mentioned? Acquisitions, mergers?
Yes, the Signity Technologies situation is a big one. Remember, Coforge already bought a 54% stake in Signity last fiscal year.
Right. What's the latest there?
They proposed a full merger, a scheme of amalgamation to absorb Signity completely into Coforge.
A full merger. Okay. Where is that process at?
They filed the plan with the stock exchanges back on January 10th, 2025. Now, it's apparently pending review and approval from SEBI, the market regulator in India.
If that goes through, that could be quite transformative, right? Expanding their capabilities.
Potentially, yes. Signity is strong in areas like software testing and quality assurance. Merging them in would definitely broaden Coforge's service offerings and market presence. Something to watch.
Definitely.
Yeah.
Anything else on the strategic front? Any risks or challenges mentioned?
They did address one specific issue. A complaint has been filed against Coforge and a subsidiary.
Oh, what kind of complaint?
It relates to a security incident that happened at a customer site.
Okay. That sounds potentially serious. What are they saying about it?
They acknowledged it in the presentation, said they're looking into their insurance coverage and talking to lawyers. They also stated that right now they can't reliably estimate the financial impact, if any.
But is it affecting the customer relationship or revenue?
They made a point of saying that services to that client are continuing and there haven't been a significant impact on revenue from that client so far.
Right. But it's an uncertainty hanging out there. Something investors will be tracking.
For sure. It's one of those things you note down and keep an eye on for updates.
Okay. So let's try and wrap this all up. We've gone through the board decisions, the financials, the strategy. What are the main takeaways from this deep dive into Coforge?
Well, I think the big picture for fiscal year 2025 is one of really strong performance. Significant revenue growth, improved profitability, record order wins suggesting good momentum.
And strategically, they seem quite active too.
Exactly. Moves like the share split, the dividend increase show shareholder focus, and the proposed Signity merger is a major strategic play for future growth and capability enhancement.
Despite that one legal uncertainty they mentioned.
Despite that one uncertainty, yes, the overall narrative presented in these documents is quite positive. Strong execution, healthy pipeline, strategic initiatives underway.
So this deep dive basically gives you, our listener, a pretty solid, condensed view of where Coforge stands right now, based on their own disclosures.
That's the goal, cutting through the volume to get to the core story.
All right, so final thought then. We've seen the strong results, the record orders, the potential Signity merger. What do you think looms largest for Coforge's growth in the next year? Is it landing more of those huge deals? Is it successfully integrating Signity, assuming that goes ahead? Or maybe something else entirely?
It's a good question. Integration is always complex, but the potential scale is huge. Continued deal momentum is critical, too.
Lots to think about there. Definitely gives you something to mull over. Thanks for joining us on this deep dive. We'll be back soon, digging into another set of source materials.